There's definitely a lot of fear, uncertainty, and doubt in the market space right now, especially amid the new announcement that there's going to be discussions about increasing the capital gains tax. What is going on, coin traders? Thanks for joining me today for the show. A lot of uncertainty, fear, and doubt, or FUD in the markets right now. One of the big reasons why we have been seeing a huge pullback. Now, obviously, just with the recent daily announcement about the tax hike, we are still seeing plenty of downside perpetuated by the China outage, by a lot of liquidations, by a lot of other FUD, now by pretty much non-stop bearish and FUD news. But in reality, we were actually anticipating a bit of bearish pullback anyway. This is just kind of the catalyst that actually kicked everything off and is now having those dominoes play out for this pullback like we've been talking about for a while, since we have been extremely extended. And we have been seeing this overall market space lose volume, lose steam, lose momentum. And now this is kind of when we are looking at that actual pullback stage. The good news, however, is that we actually have plenty of historical data to compare this pullback to. So we're still very much in a bull market. And I do still very much anticipate a bounce and recovery, and still to see a six-figure Bitcoin and higher highs for the rest of the crypto space here coming up this year. Okay, yeah, so we're going to talk all about that today in the show. So if that all sounds good and you're ready, smash that free like button. Let's fucking go. Several big announcements coming in, basically about the Biden administration. The big notable one today was about the potential of a 40% capital gains tax, and that does apply to both long-term and short-term capital gains. The second one obviously being this Biden administration, and they are talking about having a lot more regulation moving forward. Now, a lot of countries have been talking about actually banning cryptocurrency. They have admitted that it doesn't appear like that's likely for us here in the US, but we do know that there is going to be a lot more regulation, and overall that is thought to be extremely bearish, especially with regards to tax situations. So Bitcoin has been going a lot slower lately, and just now we did break that new lower low, which was below 50,305. So now we are sitting at a new lower low of $48,502.73, which is where we have bounced. Now we have been looking at this ascending wedge for a little bit of time now, and we know that we'll pull up volume here in a second, that these patterns typically are very bearish until we actually get that breakout. So if we do pull up volume and we zoom out, you can see how the overall volume for this space has pretty much been declining since we did hit this trend high back in January. So ever since then, volume overall has just been tapering down. And if we actually switch over to the weekly chart, you can get a much clearer picture of how this has been playing out. So the good news here is that we are looking at a pullback after seeing this upside move and kind of this ascending wedge. But we know that a very nice bounce opportunity is going to be right at this 50-period EMA. So that is still a little bit of a ways to go. So from current prices, we're looking at about a 17% pullback from where we already are. Now on this weekly, we do have a very strong closing resistance right at this $60,000 level. And you can see we actually got 5 different tests of this level on those weeks. So we are confirming it for 5 weeks that it is a very, very, very resistive point that is providing a lot of bearish pressure when we do look at this overall level. So anytime prices do get above it, bears step in, shoot this price back down. So seeing a bearish close on this weekly isn't necessarily a bad thing, because the last time we saw it wasn't actually that long ago. It does seem like a little bit ago, since it was back in August of last year. But that's actually the time that we last saw it. And since we have been traveling above this 12-period exponential moving average this whole time, we did have this big air gap. So even on these pullbacks, we still never confirmed and tested this 12-period exponential moving average. So the markets were just extremely euphoric and have been very overbought lately. So as such, seeing a test and a touch of this 12-period exponential moving average on this weekly chart is something we ultimately have to do. And quite frankly, we probably will be looking at a test of this 26-period exponential moving average as well. And hopefully that'll have the prices aligned just above the $40,000 level, which was a very strong closing resistance point, kind of like what we saw back in January. And then ultimately from there ran up, saw new all-time highs. So definitely seeing this pullback in a test is something we ultimately had to do, because we can't just keep going up and up and up and up and up forever. And quite frankly, pulling back and establishing a point of support is much, much, much better for longer term growth. Since we are pulling back, kicking off of a support somewhere, probably it will be still lower than where we're at now. And like I said, I do think probably in the $40,000 level somewhere, since I do still anticipate it to play out over the next couple of weeks. And that's kind of one of the things I talked about, how we wouldn't see anything fun happen for probably a few weeks to a couple months or so. Almost kind of like what we saw back in the summer So picture like something like we saw here, pulling back, bouncing, finding support off this 50-period EMA, and then being back on our way up. Definitely a very plausible scenario. So wanted to talk about some historical references, specifically with regard to the 2017 bull run. So we do have that up on the screen right now. If you notice, every single time we did have a retracement, the weekly did pull back and kick off this 26-period exponential moving average. So we saw a pullback, a test, bouncing, more price upside, pulling back. We actually set a higher low in that instance as well. But if we keep on zooming back, actually, you can see that we were also testing this time and time again early in that bull rally. And then ultimately, you can see that once we did actually pull back and close bearish below that 50-period EMA, that was one of the big signs and signals. Obviously, that was a huge pullback until then, but that ultimately confirmed that this bull run was in fact over and that we weren't just going to be seeing this next bounce and the next leg to the upside. Percentage-wise, though, from the top, we were looking at about 50%. Yeah, over 50% to see that pullback below that 26-period exponential moving average. So that's nowhere near what we're at right now. So if you can see the high, looking to where we are now, pretty much to intersect the 26-period EMA is about 37%. So we're definitely not even anywhere close to the euphoric stage that we're going to ultimately get to, in my opinion anyway, just based off of how much we're actually going to retrace, pull back, and how far above the exponential moving averages the levels ultimately are. Even in the January move, we were looking at exponential moving average being 55%. So since in this instance we were so high above, and we ultimately did hold a close very nicely above this $30,000 level, closing support was $32,000. Seeing that bounce and then the next leg to the upside, allowing these exponential moving averages to catch up, is always a very bullish thing, because we're enabling these supports and this normalization of this price level to occur and actually catch up to where this price level is. So that's why pulling back and seeing establishment and support is actually a very good thing, despite there being a lot of red in the markets right now. Hopefully this is confirming once again why you should basically never be in a leveraged position, because it's always really impossible to perfectly time these things. And if you are in a leveraged long, obviously if you're short right now, power to you. But being in a leveraged long is definitely a very scary situation right now. And one of the reasons why there's really no need to actually get leverage and use leverage in these type of markets, specifically because the gains are so high. Okay, switching back over to the daily chart now for Bitcoin. I want to talk about the RSI. Got it pulled up right now at current price point. We're all looking at an RSI on this daily of 32.0. Basically, it's fluctuating right about that 32 level. But if you notice, price points actually aren't at the bottom that we hit right now. So from the bottom, right at a price of 48,502, the RSI was actually below this 30 line, so we were barely dipping into these oversold conditions. Now, since we are seeing oversold conditions, and keep in mind, we actually have been seeing a pullback for a few days now. More than a few, it's actually, yeah, so about 9 days we've been pulling back for a total of 23%-ish. So keep in mind that out of these 9 days, we've only seen, looks like 2 very minimal bullish days. So this is a sign that we're actually going to see a lot of selling pressure get exhausted. The last time we've actually seen a run was pretty much in this pattern. And then even back in January, we actually saw a very gradual bull flag that did pull back, kick off support. So we haven't seen a big retracement that has sustained without a nice oversold bounce. But kind of the kicker now is when we do get that bounce, likely that would put us at a lower high. So now we're going to likely anticipate an equilibrium unless we get an extreme amount of bullish volume or some sort of good bullish news, which would propel a lot more buying into the space. That is the one bullish scenario to play out. So we're now going to have that level as resistance too. So we would have to see a run up, break this level of resistance right at 55,000, basically to 56,000. And then the next level of resistance above that would be at 60,000, which would be that weekly closing resistance as well. Then topping out these previous trend highs and then above the all-time high and then above that 64,000 level. So a lot of volume and bullish pressure are going to be needed to actually see these higher highs. And that's not going to happen overnight. So since we are seeing this bearish chart setup, we're actually going to need to pull up, set a high, pull back, set a higher low, and then be on our way in that instance. That's probably going to be the biggest bullish case. But since we are getting to that overbought level for this daily RSI, if we actually zoom out, we haven't seen this daily get down that low since we did have the March COVID dump last year. Now, the lowest that the RSI has been since then on a close is actually back 3rd of September. We saw 33.48. So let's actually zoom in on this part of the chart a little bit more. So we actually got sort of a similar pattern, except we weren't getting a higher high compared to what we saw, but we saw a pretty big flush, ultimately finding support right at that 10,000. But the exponential moving averages got that bearish cross as well, pulled back, set below that, and then ultimately found support at this big period of that accumulation. And then from there, the rest is history. So plenty of price levels for support past that. So 47,000 is definitely going to be extremely relevant. Below that, we're going to be looking at 44,000, and then pretty much down to the 40,000 psychological, which was extremely resistive previously. And then if we turn on the VPVR, or the volume profile visible range, this is the volume based off of the price levels instead of down by time, which is like what we typically see for these ones down here on the bottom. So seeing this pullback is actually sitting on top of a very nice chunk of big volume. Obviously, when we do see the move to the upside, if you look over here on the VPVR, there's a big chunk of volume coming in there, which is also right where these exponential moving averages are going to meet up. So price level wise, that is going to be right at the $56,000 level. So if we do see that bounce, 56,000 is going to be an extremely resistive target. So hopefully we will see a lot of bullish support to be able to buy and power through that level. Otherwise, we're definitely going to run the risk of that being an oversold bounce and then seeing the next leg to the downside, probably then to test around that $40,000 psychological. But first, the $44,000 level. But the problem there is that if we look over on the VPVR, once we pass about 47,000, which is one of the big supports that we were talking about, there's almost no volume on this VPVR, pretty much since we just powered through this level so quick with this one single bullish candle. The problem there is we didn't get time to establish a resistance, so therefore it's going to be tough to actually have a support. So the point there would be that if and when we actually do give up this level, 44,000, then likely I would anticipate blowing through it pretty quick, then to test this $40,000 level, and from there we have a big period of accumulating bullish volume. I don't really realistically see prices going any lower than that, and that's why if we switch back over to the weekly, we were talking about that being a very good target, and being a point that I could see prices wicking below it and then finding immediate buy support, pushing them back up on top of that $40,000 level. So personally, based off of those factors, I still kind of am anticipating over the next couple of weeks or so to see that pullback down to that $40,000 level. I think given what we're seeing right now from the charts, that's a very probable scenario to play out. So probably an oversold bounce coming in from this RSI, smashing up, seeing a resistance point at 56, then likely seeing another pullback and another test of probably 44,000. And then hopefully the bulls can find some support around there. If not, test this $40,000 level and then find support as well. I think either way, both of these levels are going to be extremely supportive. And then hopefully from there, find a lot more bullish buying pressure to see prices heading back to the upside. Now, got to switch over and talk about Ethereum for a second, just because we're looking at the overall altcoin crypto space, and Ethereum is obviously the top name altcoin. So it set a new all-time high today. Grats to the Ethereum bulls. And one of the things that happens that we like is that when Bitcoin goes sideways or starts to pull back, that's when we can really see altcoins do well, because then it's easier for the dominance of Bitcoin to just tank. Now, looking at Bitcoin dominance, we're sitting at about 52%, just because right now the rest of the altcoins are dumping faster than Bitcoin right now. But as you can see, we've been talking about this ascending wedge channel for this dominance for quite some time. Finally ended up breaking it a few weeks ago, and now we've seen the dominance just pulling back pretty hard, as the rest of the altcoin space does well. So obviously it's impossible for it to just continue to pull back nonstop, so we do probably anticipate some dumps. But the great and bullish thing here is that since we are actually breaking bearish from it, then that is going to indicate, especially since we passed all of the low of supports, we've passed this support. So now we're actually getting stuck up on these previous levels. So that was the resistance on this bounce, and it was support before finding the low here. So having Bitcoin dominance still pull back and continue to see lower lows, great sign for the rest of the altcoin space. Obviously not so much for Bitcoin bulls, but this is what we like to see happen in very strong markets. And pretty much we are going to anticipate this just to keep flushing, kind of like we saw. So I really do anticipate this low of dominance to actually break. And during this bull run, I do anticipate a new level of low of dominance to actually be found. And then now moving over to the Ethereum Bitcoin pairing chart, it's been looking very nice since we are setting higher highs and higher lows. So potentially we could even be pulling back, setting a higher low. Not really sure I really see that happening right now. especially since everything's kind of more or less pulling back at the same rate. Ethereum's still stronger, so we are getting a lot more of this bullish candle. But the fact that we are in a very nice uptrend after a period of, well, very long period of a downtrend is actually a very good sign, especially after breaking a lot of these resistance points. So it's showing a lot of strength in the rest of the altcoin space to be moving a lot more of that energy, that those funds and that confidence over into the rest of the altcoins from Bitcoin. So one final thing to note right now for Bitcoin, which should hopefully give some confidence as we do wrap up the show, but after we did see the February pullback, this is the 4-hour chart, by the way, and as we were making these lower lows on this chart, we were actually seeing these higher lows on this RSI, and we talk about the divergence and convergence of a lot of these trends, both in terms of higher lows with lower lows on price. So this convergence is actually a very good indication of some sort of reversal. And once you usually see 3 tests, it's an even better indication. So as you can see how this played out, we ran up, set a higher low, and then went on to see the next leg to the upside, making that all-time high. So since we are actually seeing these lower lows in price, but yet right now we are looking at a higher low in RSI, we're looking at convergence once again between the price level and the RSI. So that is going to be one of those bullish factors that we can consider when we talk about the overall price moves. So factor that in too with the fact that now the daily RSI is getting oversold. We're looking at more indications of a potential bounce playing out. And then of course we do have to draw our little face. So hopefully that provided a little bit more clarity and alleviated a lot of FUD concerns, but this is overall an extremely normal scenario, and believe me, I have a bunch of money in crypto right now and I'm not panicking, so you shouldn't be either, and pretty much that's why you shouldn't be in a leveraged trade. Because I think the only people that should be panicking right now are people that are going long on Bitcoin and, yeah, seeing all that leverage just disappear with all of these liquidations and that actual loss. But yeah, otherwise just continue to hold because we will likely be seeing a next leg to the upside here before too long. But like I said, we might still see another couple weeks of pullback or so. Nothing to worry about. Take that time. Learn about some fundamentals of some new projects, things like that. Basically, don't even focus on it too much because we're nowhere near the end of this overall bull cycle. But a shakeout like this, we see every single bull run, and we see it every single time once we do get extended. So these pullbacks are always normal. They're extremely healthy, and believe me, we can't see the next big leg to the upside without a substantial cooldown and sell-off. And with that, that is going to go ahead and wrap up the show today, though. Hope you all enjoyed. If you did, please consider hitting those thumbs up, like, and subscribe buttons. Definitely means a lot. Lets me know you enjoyed the content and that you're not worried about Bitcoin crashing anymore. Do post all your questions, comments, disagreements, predictions, all that other fun stuff below. Love getting back to each and every one of you. Thanks again for all the continued love and support, as always. Definitely means so much. Stay safe, everyone. Take care, and I will catch you back in the next video.